Hey everybody, this is Jose Blasco. We are about to get started. As always, please let's have a quick sound check. A quick hello on the chat box would do, so I know you hear me and all is good to get started. Let's do that, please. And in the meantime, I will put myself in the bottom right side of the screen so I can say hello from that side. How are you, everybody? It's time to get started, actually. Yes, and I can see the sound is good. Okay, wonderful. So everybody, we are live. Today is Jun-24, 2021. Not sure what's happening. Sometimes my screen is kind of flashing, something weird. I had an update on my video drivers. Maybe that's the reason. Anyway, thank you for those confirmations on the sound. Today, Jun-24, 2021, options with options. So let's begin the session. We have lots to do. Yesterday was a busy day, isn't it? We were talking, we spent a lot of time talking about management. We spent the whole time. It was a great session, though. I think it was very helpful because there were a couple of unique situations. But again, today, while we have some work to do, Christian, you are absolutely right. We have to take action on AMD. We need to review PayPal. So we have still things to do when it comes to trade management, but we also have to find some new trade to add it to the account as well, isn't it? So we're going to do all of that. Leland, how are you, my friend? It's good to see you. Very good, everybody. So let's begin. Disclaimer on the upper left side of the screen. Please read it carefully. This is important information. Okay. Do not skip it. Read it well. No rush. And when it comes to the agenda, as always, we just said hello. We are simulcasting, so be aware of the video lags. Be aware as well that in a normal case, not yesterday definitely, but in a normal case, in the private room, tradewithufos.com/live, we run the full duration session. Outside of the private room, typically the sessions last less because normally after we get one or two trades, we stop there. Again, given the different profile of traders, meaning traders looking at trading as a part-time thing, attending the sessions from YouTube and Facebook, traders looking at trading like it's something that you love, you always want more, never got enough, and then you want full access to the full duration sessions, so you do it from the private room. Okay, so keep all of this in mind, and then we're gonna start as always reviewing the market, looking at the trades, and then finding new trades as well. Cool. So here is TradeStation. Okay, the market is, if I zoom in, okay, so the high that we had there was 425.59. Today the market hit the high 425.53. Okay, so from 53 cents to 59, the market went 6 cents away from starting making all times high. Didn't start making all times high, but kind of almost, isn't it? So yeah, so this is what we have. Again, we are back into, as we said yesterday, a new climate. Yesterday also I said I'm not that positive, there are no UFOs, but guess what we have today? Now we have more UFOs on their price, and the climate is still at the very beginning of its propagation, 2 out of 9. So we are likely going to see some continuation. The market may need to go back down to retest any of those two UFOs, but probability suggests it's going to continue. Okay, so definitely we want to enjoy those moves. Okay, Lily today gapped up like 8%, so that trade is doing amazingly well for us. So we're gonna have to take a look at this trade as well. Okay, the VIX today went down, almost down to 14. Okay, 14.18. It is trading currently at 15.68. So again, volatility at very, very low levels. Okay, very, very low level. So, again, we'll start with non-directional trades. I'll talk more about that later on. But first, let's begin with the reviews, okay? So let's start with what's simple, okay? We're going to look at, well, actually, even simpler than that. CVNA, this is a trade from the last week. I didn't have time to review this trade yesterday. We planned this trade last Thursday. We were expecting the stock to come back to this UFO and take action. It never happened. So there is nothing to comment on CVNA. The order expired. It was a day order. It expired, and we never got a fill. How are you, Siderman? Lily, again, it's currently trading at 7.78% higher than the closing price of yesterday. That's a powerful UFO, isn't it? it pushed the price higher by 8%. So thank you very much. The trade is looking beautiful in the account at the moment. Lily is showing $700+ of profit. Remember, the most we'll make is 1,200 over. The worst case is to make 200 over. So we'll talk more about this trade as we are getting closer to expiration, which is July 16, if I am not mistaken. So far, there is nothing to be said, nothing to be done. We are just going with the flow with this trade. Okay. Starbucks. Okay. Starbucks has been moving very strong today, 0.88%. So it went higher. Again, the expiration date for that trade is tomorrow. So it's looking like we will end up in a profit. But since it's been a pretty powerful move, if you were to compare yesterday and today, I need to re-update my dotted lines, okay, which is the price projection, okay, from now until June 25, and see if we are still in a good position or we are now at risk. And if we are at risk, we're gonna have to do some sort of a roll, isn't it? So looking at Starbucks, okay, very good. How is it going out there in YouTube? You guys have been very quiet. Just say hello, guys, so I know you are there and all is good. Okay, so this is the trade with Starbucks. Probabilities suggest 114 to 111. Okay, so if we look at the chart, 114 is right there. 111 is more or less here. Okay, so it is looking very, very good for the stock to still be in the purple area into tomorrow. So if that's the case, just do nothing, let it expire. This is a trade where we didn't collect that much premium. It was meeting the rules, of course, but it was not like it was that hefty when it comes to premium. Therefore, if you could avoid paying commissions to get out, that would make a difference. Okay, so since probability looks very good, we have multiple UFOs above, multiple UFOs below. Really, we just go with the flow, guys. There is nothing to be done, just to wait until tomorrow, the closing time. Okay. Joanne, low internet, got you, understood. No, not an issue, Joanne, not an issue. Okay, so we have Starbucks, okay, and now PayPal and AMD are the two trades that will get us to get a bit busier with whatever we choose to do with them. Okay, so we'll start with PayPal. Yesterday, if you recall, I looked at PayPal. I even left an order in. Okay. So we looked at PayPal, we looked at the put side, okay, of PayPal. When we sold last Monday the 230 put that expires in June 25 on PayPal, we only got paid 10 cents. So my comment yesterday was that doing the roll, while needed, it was not that worth it, in the sense that you were going to pay equal amount of money in commissions that the premium you were going to collect. So it was not really useful, and the reason why is because that stock has been moving like crazy. Today it's up another 2%, so it's really impressive what that stock, I should say, not that company, but more its stock, the shares of that company is doing. And unfortunately, the higher it goes, the less the value of the puts. So if yesterday it was difficult to roll for a decent amount of premium, today it's even less. Okay, so again, we leave that order with the 230 put expiring on July 2nd. We leave it for Monday. If you recall, we had let me say that again, a condition. Here's the word. So we had a condition for this order not to trigger until Monday. Why Monday? Because we are waiting for the 230 put that expires tomorrow to expire. So once it expires, the next time we can trade is Monday. So that's why we have the order there. And then the one that we never changed yesterday was the 260 call, and we need to do something about it, because if we don't do something about it, we're gonna be assigned. It's not an issue, and it may be the choice. Actually, the right choice may be to go through assignment in this case on purpose. Okay, so let's talk about it, because these are great cases for these cases to happen. Because if this happens to you when you are by yourself at home and we are not running a session that day, and so you may be wondering, what do I do now, right? So again, let me explain. What do we have in this case? we have a 260 call that expires on Friday, we are short, and we have a 260 call that expires on July 16. Okay, so the 260 call we are long expires on July 16. The stock is trading at 293 right now, making that 260 call to be $33 in the money. Okay, $33 in the money. So in other words, it's deep, deep, deep in the money, and for sure, if you do nothing about this call, you're gonna get a sign. If you get assigned a short call, you will find yourself short 100 shares, which is not an issue because you would find yourself with no call any longer. What you would have instead is minus 100 shares. But because you have minus 100 shares and you are long a call, okay, so you have the risk limited because the more the stock rallies, the more you lose when you're short. But because you have the 260 call against the short position, so your risk is limited, and the most you can lose is what you pay for the call, right? So again, you probably know, we talked about this before, this is a formula you need to know by heart, okay? Which long stock equals long call short put, okay? In other words, if you end up with a long call and a short stock position, so that equals long put, isn't it? So you take stock, you move it to the other side, and therefore it becomes minus. You take the put, which is minus, you move it to the other side, and it becomes plus. So in other words, being short stock and long call is the same as being long a put. No one is scared to be long a put because everybody knows that when you buy a put, if the market drops, you make money, and the most you can lose if it rallies is what you pay for the put, right? So not an issue, right? So this is exactly what's going to happen if you get a sign. So not an issue because you have a call that will not expire until much later, which is July 16, okay? Now, the impact of being assigned on a 260 call, it's the margin, that now you're going to require more margin, okay? Again, if we were to go through this process of being happy to be assigned, it's just because we have plans to do something on Monday, okay? Because in a perfect world, or in an easier case, we would just do a roll, right? I mean, what are the rules to do a roll? Well, to do a roll, what we do is that we look at the 260 call in June. Okay, something happened to the option chain. We look at the 260 call in June 25. Okay, right there. We look at the extrinsic value, which is 5. Okay, we look at the theta, which is actually is 7. The theta is 0. So, you know, here, because it's so crazily deep in the money, so it seems that, you know, theta is, you know, again, it's to be honest, it cannot be 0. It's just that we're lacking decimal places. So if we were to see the decimal places, you would multiply that number times 1.5 days, which is until tomorrow. And, you know, it may be 2, it may be 3, it may be 5, you know, whatever it is. So again, to be honest, when you look at the thetas, look at that, 2, 13, 17, 0, 9, 0. So all those values are totally distorted, okay? And why is that? Well, because these options being so deep in the money, the deeper you're in the money or the deeper you are out of the money, the more unreliable the Greeks will be. The closer you are to at the money, the more reliable the Greeks are, okay? So in this case, we are $33 in the money, almost $34, and therefore all those Greeks got no meaning. So as we discussed yesterday, I will be delighted to roll. But if I roll, at least yesterday, let's check today. If I do a roll, create a rolling order, rolling my June 25 option to July 2nd, that's going to pay me 37 cents, which, by the way, is better than yesterday. Okay, yesterday there was a time where I think it was showing, was it 7 cents or something like that? I'm not sure right now, but something like that. So yeah, so again, it's better than yesterday, but it's very little. Okay, so you have two choices. Okay, you have two choices. Roll. Okay, and by rolling, what you're gonna do is just to get 42 cents, and that's it. Or don't roll, accept assignment. Let me go back to the option chain. And then on Monday, when the market reopens, using July 2nd, you can then go ahead and sell the 260. Now, if I sell the 260 on Monday, make sure you understand, you won't get $33 of premium. You will get that, you will, but when you close the short position you got assigned, since the stock is trading $33 higher, you will get a loss of $33 per share times 100 is $3,300. And in exchange for that loss of $3,000 over dollars, you will get $3,000 over dollars in premium. Okay, so what's the real benefit of doing that? Well, the real benefit is the extrinsic value. That's the real benefit of doing that. That's the only benefit of doing that, the extrinsic value, right? Which is 38. So in other words, if you roll now, okay, it's looking like liquidity is so much better today than yesterday, you're gonna get 42 cents. If you wait until Monday to roll, you will not have to pay commissions. You will not get any sort of slippage or anything else in the unit you close. You will get slippage on the unit you sell, but not the one you close. But then the benefit you will get is 29 cents, okay? 38 cents. This is fluctuating obviously as the prices are changing, okay? And that's today. On Monday is going to be a bit less because time decay will happen over the weekend. So on Monday you should count it's going to be a bit less, okay? So yesterday it was not looking like it was a good time to roll, but guess what? Today it's looking like it's a good time to roll because basically the extrinsic value you would get if you were not to suffer slippage happens to be the credit you will collect if you do the trade now, okay? So if I do the trade now, okay, and I roll, so this is gonna give me like 45 cents or something like that. So what would that do to my P&L? Because the P&L of this trade at this moment in time, it's minus 286, okay, minus 286. On Thinkorswim, the P&L for PayPal shows as minus 108, but that's not correct because we have done prior rolls where we have taken a little bit of pain in some of the rolls. So if you count on everything that happened, okay, then the net P&L of the trade is actually minus 288. Wait a minute, like that. Like this, minus 289.5, exactly. Wait a minute. Like this. I just need to check the one above, right? So minus 286. This is the one, okay? Now, if I'm gonna roll, so rolling would be this, okay? So close, this is backwards. Exactly. So close, buy to close the 260 that expires on June 25, and sell to open the 260 that expires in June 2nd. This will bring in 35 cents of premium if you get the midpoint. This is fluctuating. A minute ago it was 38, a minute ago it was 40 something, now it's 35. So it just keeps changing. Okay, it could range all the way from 80 all the way to plus 10. Okay, so so if we get a good price, you know, it's definitely worth it to do it today, which was not the case yesterday. Okay, so if you add that, okay, so what's going to happen is that your P&L remains the same, okay, but you just reduce the risk of the trade by another. Now it shows 28 cents, so this is kind of fluctuating all the time. So now it shows 28. So let me simulate that. Okay. So if we do 28, okay, I'm going to duplicate the trade. So now I got two. Okay, the one on the top I will uncheck, and the one in the bottom, what I'm going to do is the 260 call that expires in June 25, I'm going to roll it to July 2nd. Okay, and I will update the premium. So it was 394. This is what I got so far. If I do the roll, TOS tells me 27 cents. That's incredible. Notice how things change in a minute. Okay, a minute ago was 40 something. I still feel it's worth it. I mean, yesterday with 7 cents, definitely not, but with 27, we'll do it. So we can avoid the assignment because of the margin impact. And again, so 394 minus 27, that would drop the cost of the trade to be down to 367. So if that's the case, that now means that the most you can lose on the trade is 367, okay, while you are still in a position where, let's see what happens today, because yesterday it was crazy when I simulated volatility. Today it does nothing at all. So there is indeed a bug in the last version of TradeStation. Volatility is just not behaving well. But again, remember, if volatility increases, okay, your current negative PNL of minus 276 may actually end up above the zero line, okay? And definitely if the stock was to go back down, that would be ideal, because now you're gonna be making, you know, potentially $400 or something like that on this trade, okay? So again, we're gonna just keep working on this trade, on trying to improve it as much as we can. So I am going to accept the role. I didn't think I would do that today, but I will accept the role. So I'm just gonna confirm and send the role, and hopefully we'll get a fill, and let's see how much we get for the fill. And if you guys are doing the role and you get filled in your real accounts, it would also be very, very nice that you share with the group how much you got, because it's gonna be a good reference for us to know what to expect. So I'm just gonna change it to try to get the fill. That way we can move into other trades. I'm just gonna shoot for 20, just so hopefully I get more. Okay, that's it. So I got 20 on this roll. Okay, I got 20 cents on the roll. I am pretty positive that in a real account you should get more than 20, but I got 20. So that's what it is, okay? So now, of course, now PayPal now shows $2,000 of profit. Remember, this is not accurate, okay? This is not accurate. Now it shows $2,000 of profit because we removed the unit that was creating the greatest pain. We replaced it by a new one with much more premium. So now it's showing, you know, $2,000 of profit. Again, it is not accurate, okay? It is not accurate at all, okay? The net result of the trade right now, after we have done the roll, for 20 cents, which 20 cents means that would be 74, right? So 3.74. This is the new trade that we have. So I'm going to delete the new one, the prior one. So this is the new trade we have with both units in the middle with July 2nd, right? So this trade, it's currently showing a PNL, a net PNL if you add up everything, of 288 negative, okay? So it's not $2,000 positive. Please make sure you understand that we have just collected a loss in the account. It's a temporary loss in exchange to grab all that extra premium, $2,000 over dollars, which is great. But the reality of the trade, if you count on everything that happened since the birth of this trade, is negative 291, okay? So don't get confused by that. Ahmed, how are you, my friend? Good to see you. Very good. Okay, so that's it. So we have it with PayPal. And again, please, guys, when you do the rolls, confirm your fills. You know, I thought I was going to, but I do not advise to go through assignment in this case, since we were able to catch or grab almost all the available extrinsic value today, which is probably better than what you would do on Monday, because on Monday the extrinsic value is going to be less because it's 3 days less of extrinsic value, giving the fact that it's 3 days more with time decay impacts, okay? Anyway, AMD. What are we going to do with AMD? Okay, well, AMD is an interesting trade because it is a trade where, you know, we are lacking a put, okay? So let me bring this first to the chart and then to Option Station Pro. Okay, so AMD is also a double calendar, okay? It's also a double calendar. We are using the 70 strike and the 85 strike, okay? This is what we have in this trade, okay? And, you know, what happened is that if you compare the day when we got into this trade and today, then, you know, really the premiums never went too much higher. Actually, for a moment in time, the premiums went lower when it comes to implied volatility. So when we tried to do the roll, it was really not worth it to do any sort of a roll, okay? Which was kind of weird because we expected volatility to increase, but the opposite happened, okay? So what did we do? Well, we tried to do the roll on the puts. We never achieved to do the roll, right? And therefore, when you look at this trade, this is what we currently have. We have July 16 above and below, so 85 call and 70 put, okay? But then in the middle, okay, we do have the 85 call that expires in June 25, but notice how the June 18, okay, it says quantity 0. Why? Because it expired and we were not able to find a 70 put that pays anything decent, okay? And again, if July 16 is our further expiration date, notice what happens. July 9, which is the one before, it's only paying 6 cents. So, you know, I just set the minimum at 10 cents, isn't it? So 6 cents is less than that, and therefore, you know, we never found a put to add to, you know, this trade. So the only thing that we were able to do was to roll the call, which is the 85 call, and that 85 call needs to be treated, okay, because it's deep in the money, but not so deep in the money, but, you know, $1.72 in the money, okay, and therefore the Greeks may be distorted at this moment in time, and I want to check that, and they are, because extrinsic value is 16, so that's the more you will make with that option, okay, but notice how theta shows 18, so 18 times 1.5, which is until tomorrow expiration, it's kind of like 20 something cents, but the most you can make is 16, which is the extrinsic value. So in other words, we have distorted Greeks, and therefore it is time to roll the 85 call. Okay, we're gonna roll it, okay, to the next expiration date from June 25 to July 2nd. And this is gonna bring in 74 cents. So if we do that, what's the result? Okay, so let's take a look. So I'm going to, oh, it does not allow me to duplicate because, yeah, okay, I understand. I cannot duplicate it because it's you know, it's a weird situation. The TradeStation doesn't understand what that thing is with a 0. Okay, so what I'm going to do is I'm just going to move this to July 2nd. Okay, and then I'm going to move this to July 2nd as well. And currently the cost of this trade is 83. Okay, so I'm going to use my calculator. I'm going to type 83 cents. Okay, and I'm going to copy that number just in case I forget. Okay, so I can always paste it back. Okay, so 83 cents is the cost of the trade currently. Well, guess what? If I roll and I take in 73 cents, 74, that means that the cost of the trade is now diminished by 14, meaning that now the cost of this trade is going to be how much I said, was it 9 cents. So now if the cost of the trade after the roll is 9 cents, so what's the most you can lose? 9 cents, right? So if the market rally to the infinite, you're gonna lose 9 cents. But if that market falls, then you're gonna start making money, where the peak here is about $200 per contract. So it's nice. You have a risk of $9 in order to make $200 of profit. So it's pretty okay, isn't it? It's a nice roll. And by the way, next week we'll do it again. So we are very, very close to get to this no risk situation with this trade. Just by doing another roll, we should get there to have no more risk on the trade. And if we were to be able to sell a put for 10 cents, well, 10 cents is more than 9 cents, and now you would be in a credit position. Okay, and then you cannot lose any longer in that situation. Now again, I'm not sure what's going to happen if I add 5%. It seems that it's simulating properly now. So if you increase the volatility, so notice how the P&L rallies to 123, where if volatility remains where it is, so the P&L it's $98. Okay, this is what this trade is paying so far if you add up everything that we have been doing one step at a time. So my friends, time to roll. It looks like we may get 75 cents. I'm just gonna move it down to less, so hopefully I get filled very quickly. Please don't do that. Go for the midpoint and negotiate from them. A little bit of bargaining in this case is good. I got 75. Okay, so if I got 75 and my initial price was 83, so 83 minus 75 is 8. Okay, so that is the new trade that we have in place. What am I going to do? Well, I am going to add an order to sell the 70 puts, even though it's not likely going to work because 70 put in July is only 2-3 cents. But I'm gonna add the order, you never know. So sell a single option for a minimum of 10 cents. Okay, for a minimum of 10 cents. I need rules around that. So that's gonna be on Monday. So again, if tomorrow the market was to drop very heavily on Monday at the open or during the Monday as well, so as long as it's more than 9 a.m., you know, I was using 33, and I even know why 33, but you get my point. It's just to give a little bit of extra time so you are not doing the trade right at the open where liquidity is worse. Okay, so again, we are going to be selling that option for 10 cents with a day order. Probably we won't get filled, just like what happened last week. But if the market is kind enough to do that, so now we're going to be in a sure thing profit situation, and then hopefully see the implied volatility rise on that trade. Okay, so that is all from a trade management point of view that, you know, took a decent amount of time today as well. But please, guys, I need your confirmation that everybody's with me. You guys may be busy with placing those orders. I don't see any comments on the chat with any prices that you got filled at, so I guess you are still trying to negotiate, but at least give me a quick answer here if possible, where you just confirm that you are okay if I continue, that you got me, you understood what I did, you are able to do it by yourself, and I could continue. If you need me to repeat something, I'm certainly happy to do it. You guys are doing this with real money, and I want to support you guys. I don't want to have you get confused and then you're by yourself. So this is the time to ask questions. But if you don't have any question, I would certainly like you to confirm that all is good. Okay. With you waiting to be filled on the call. Very nice, sir, man. Perfect. Cool. Thank you for that. So let's go for it, guys. We need to find trades. Now, notice what's going to happen, okay? So tomorrow Starbucks expires, and we are going to be left with PayPal and AMD, which are both, okay, which both PayPal and AMD are both positive vega. Okay, so today is a terrible day to try to do iron condors because VIX went down, 14.18 was the low, if I'm not mistaken. So it's not a very, very good day to do iron condors because the VIX is very low. But guess what? If I was to do another double diagonal or double calendar, next thing you know, I got 3 trades that are all positive vega in the account. Guess what? If the market keeps making all-times high, the VIX will likely start dropping even more. And those 3 trades are really going to be disappointing with profitability because Vega is moving against us. Okay, even PayPal that has been moving like crazy, you can see that we are underwater at the moment, right? Not a big deal, but at the same time, you would expect that volatility would have risen much more given how magnific the move on that stock has been in like a month. The stock has made like, I don't know, 18% or something like that. So I don't want to add another double calendar, especially knowing that Starbucks is going to expire tomorrow and I lose my negative vega, okay? And I want to have my portfolio as well balanced as possible. So the trades I have ready here with non-directional are trades for setups for iron condors, okay? Again, it's not the best day to do it, but again, the scanner is doing its job at trying to find the trades with the greatest level of implied volatility, etc., okay? And therefore, with all of this in mind, we're going to try to make it work, okay? And here is United Health, with very nice probability, red UFOs and green UFOs below. If I look at pre and post market, that's not good enough, it's 42%, so we'll stick with regular session data. Earnings are happening on July 14, okay? So July 14 is there. Okay, so we can use up to July 9. Okay, so we have a few choices, a couple of choices, if you wish, of expiration dates, and hopefully we'll be able to put something together with UNH. So let's take a look, starting with July 2nd, and let's see if adding an iron condor to UNH it's something that we can do or not. Let's go for it. We got plus and minus. Here we go. So first thing is the ranges. So 410 to 387. Okay, 410 to 387. So 387, something like that. Okay, so this would be the range that we are supposed to see from now until July 2nd. Okay. Of course, our rule suggests that implies and requires big time that we need at least 2 UFOs above and below. So if I go to my second UFO below, that puts us here. So if I measure from current price to below, okay, and I project these above, so basically that would mean that I will want to go there. There is no UFO there, so I will need to go to this one. And if I go to this one, and I adjust this line and I project it below, so that is probably going to point at a lower UFO, and this one is kind of making the trade almost perfect, isn't it? Very well centered. Okay, so I love it. Now this is a very wide range, and with only 2 expiration dates, I'm not sure with the VIX so low. So 424 is the number that we need to check. So 424, I need to go for 30 strikes. So 424 is going to be 425. We are really lacking liquidity here, 2 to 66. Okay, so I'm really unhappy to see that. So what if we look at July 9? 425. Oh, it's terrible liquidity. Yes, I'm not trading this, my friends. No, no good. No good, no good. Probably the next expiration date, which is monthly, would be good, but that's when earnings are taking place. So we are not going to be able to do UNH. Very sad, because the setup on the chart looks really nice. So we look at Goldman Sachs. Okay, so what's going to happen with Goldman Sachs? We have multiple UFOs above and below, great probability. Same story, July 13. Okay, so it's a very similar story. If we look at the pre-up post market, we got 42. So no good. We'll stick to regular session data. So let's do the same thing using July 2nd. Analyze and sell an iron condor. Let's see what's going to happen. The statistical range is 383.5 to 350. So 383.5 and 350, right? Yes, 350. Okay, so that's the statistical range. We need 2 UFOs below and 2 UFOs above at least. Okay, so of course this is the one that is beyond. It seems to be the only one. So that's going to be our only reference. And if we measure from that UFO to the current price, and we project this below, so this would bring our lower line to be either here. Well, here is perfect. Okay, so that's exactly the midpoint. Okay, so we are talking about 390. Okay, so how much we get for the 390s on July 2nd? Okay, the 390s would pay us 69 cents. Okay, 69 cents, which is valid because it's more than 35. Okay, so that setup works. Okay, that setup works. At least from a chart point of view, it's valid. Okay, so let's continue planning the trade. So we have 390 above, we got 342.5 below, which is also paying 78. So it works. We got 2.5 strike price increments below, and $2.5 of strike price increments above. So looking good from that point of view. So let's put it together and see if we approve the trade or we don't. So 390, 342, sorry, 392.5, and on the below part we said 342.5, and therefore it's going to be 340. Okay, this is the trade that we have in our hands. Now, is this to be approved or not? Well, the 35-cent rule is met. Okay, you roll the call at 76 either man. Very nice price, better than me. I got 75. Very good, and you guys waiting to get filled as well. Beautiful. So now the 35-cent rule has been met. I was saying that's great. Second rule we have is when we look at the distance, right? What we call the roll risk, which is $2.50. And remember, our rule is we want to collect 15%. That's 37 cents and a half, 38 cents. And what do we have here? Only 30. So we are lacking 8 cents. Now, the bid price is 46. Okay, so maybe we get lucky and there is a little bit of extra kick during the day, and enough premium comes in, and this help us approve the trade. Okay, could be. I feel it's gonna be difficult, but it could be. Okay. In any case, I want to check what if I do 337.5 and I do 395. So what if I do $5, right? So if I do $5, now what I want to collect is 15% of 5, which is 75 cents, and now here it shows 52. So that's worse. Okay, that is worse. Okay, we don't get what we want. It's worse. So meaning from a proportion point of view, 52 cents out of 75 is worse versus 30 cents out of 38. So I prefer the $2.5 strike price increment. Okay, but another attempt to make this work will be to rise my strike just a little bit to see, and I don't get it. Okay, so I was trying 392.5, 395, and 340, 337, and that is giving us 22 cents, which is less than 30. Okay, so by doing those tweaks, sometimes you get it. Okay, normally the way you get it best is the way we always do it, but I always like to explore and make sure I didn't leave money on the table if there was a way to do the trade. Okay, so we're gonna do 390 and 392.5. Here we go. So this is the best way to do it. It's showing 30 cents. So what we're gonna do in this case is that we're gonna place an order, okay, and we're gonna make it. I mean, it's looking tough. So since it's looking tough, guess what? I'm gonna go for it tough. I'm gonna ask for this trade 40 cents, okay, which is even more than 38. I'm gonna ask 40 cents. So if I get filled during the day, it means that either volatility increase, which increases the risk of the trade, or the stock is not exactly centered. So to offset that a little bit, I'm gonna add those additional 2 cents to be 40. And also because often market makers will get you an easier fill if your prices are lining up with either 0 or 5, so like 40 cents, 45 cents, instead of 38, which is often seen as an odd number, if you wish. So I'm gonna do that, okay? So I don't think we'll get filled, but we're gonna try with Goldman Sachs. And you know what? And there is one thing I almost forgot to do. So there is another thing I want to do before we do that, which I want to try this trade with July 9 and see what happens with July 9. I am afraid that if I do July 9, I'm going to be out of the range. That's why I didn't do it. But, you know, I don't want to be overconfident, so let me do it. So July 9, if I do that, that brings the range to be 386.5. You know what? I was wrong. 386.5 is here. And 347.7 is here. So the trade would be valid. Okay. So what happens if I do the July? Well, now I get 46 cents. Okay. I get 46 cents, and this is a trade that I could get in and get filled right now. Okay, at 46 cents, which is better than the minimum we need, which is 38, right? Because again, we got $2.5 of strike price increments times 15. That's 38 cents, and that's 46, which is better. Okay, so I'm gonna do this one. I'm gonna do the July 9. Okay, July 9. Let me put everything on the screen So it's all well understood. You know, this is the times where sometimes experience counts, and sometimes experience just kind of biases you. I somehow was convinced it would not work, and I was wrong. So anyway, so July 9, closing time is right here. Okay, so we are shooting for this trade like this. We need Mr. Goldman Sachs to remain in our purple box to profit. Here we go. Okay, we got UFOs above, below, everything else. Okay, so everything is looking good, and the trade that we are doing is a trade by which we are buying the 392.5 call, selling the 390 call below. All of these done using July 9, 2021 expiration date, and on the bottom part we are selling and we are buying the 340 put. Okay, so this is the trade that we plan together. Yeah, let me add Goldman Sachs here, and now it's time to place an order. Okay, now what's the risk of the trade? Well, since the strike price difference is 2.5, so this trade carries a raw risk of $250. Okay, since it seems that we're gonna get let's say 45 cents, so then the risk of the trade would be 205. Okay, if you get 45 cents, so I'm gonna shoot for 45 cents. Okay, using July 9, so right click, sell an iron condor, and again this is the time where we need to focus to not to make a mistake. So the one I buy is the 392.5. The one I sell is 390. The one I sell in the put side is 242.5. $342.5. I'm like, what's happening? 342.5. I'm going to review this just in case I'm making a mistake here. And 340. Okay, so 392.5 and 390. 392.5 and 390. Yes. 392.5 and 390. Yes. 342.5 and 340. 342.5 and 340. And 342.5 and 340. Ultimate confirmation, the premium, it shows 44 credit, which is the same I got in Tradestation. So this is good. I'm gonna shoot for 45, confirm and send. Okay, and let's see if I get filled. So Goldman Sachs trade is there waiting to get filled. Again, let me push it because I want to get it filled immediately. You guys negotiate that order as always, guys. Okay, don't be in a rush like I am. I'm just gonna go for 40 just so I get it. Okay, let me see if I can get it at 40. Come on. We just need to wait, and we should be able to get it. TradeStation is showing 24 to 65. 44 is the midpoint, so we are a little bit on this side. I believe that with patience we should get that filled at 40 cents. That should be doable. Again, same story, guys, with your real accounts. As you get fills, if you are taking this trade, please document the prices you got on the chat box, because that would be very helpful. Ahmed, you got 74. Very good, my friend. Thanks for sharing. Okay. Cool. So it seems that I am not getting the fill, and I just want to push it, guys, because that way we can do trade management in the future dates. So if I do 38 cents, what happens? That's it. Okay, I got it at 38 cents based on the simulation. Okay, that's it. So I got an iron condor here with Goldman Sachs with 38 cents. So I'm gonna do this. $0.38. That's it. This is locked, and now we can use that for review purposes in future sessions. Great. So my friends, if you are on the public streams such as YouTube, Facebook, and so on, I will say goodbye now. Thank you for joining me. And for the ones of you in the private room, we're gonna find or attempt to find another trade, at least one more before the session is over, so we can keep going and keep improving ourselves and the practice and everything else.